if you go to a dentist, if you hire a plumber, in all the professions, there is value added by the professionals as a group compared to doing it yourself or just randomly picking laymen. In the investment world, it isn't true.
Saurabh Mukherjea is one of the most famous fund managers in India. He has written viral books like Coffee Can Investing and Diamonds in the Dust. As of today, he manages a portfolio of roughly 10,000 crores. He is probably the most famous finance expert who has been invited by almost every single news channel out there. But the performance of his fund Marcellus does not match up to the hype. This year, Marcellus has generated a negative 14% return, and over the last few years also, it has been underperforming the benchmark. Now, there are very good reasons why this has happened. For example, he has told the Relaxo story, but unfortunately, the stock did not do well and he exited his position. Similarly, he criticized the public sector banks, but public sector banks have been one of the strongest outperformers in the market even as of now. He also criticized something like HDFC AMC after buying the stock. When he sold it, within 6 months, the stock gave 60% run up. So to cut the long story short, there are a host of mistakes that Marcellus has made as per my understanding. Now, of course, I am not a genius investor. The idea behind me making this video is very simple. It is not the personal criticism of Marcellus or Mr. Mukherjea. It is to highlight the fact that fund managers make mistakes, and if we as normal common people analyze the mistakes that they are making, avoid making those mistakes, then the chances are that we will be able to better handle our portfolio and will be able to generate much better returns. More importantly, my hope is that people start believing in the fact that experts can make mistakes, they can be very well educated, they can have a lot of experience, but it's not given as if that they will outperform even retail investors if retail investors are smart. So I'm going to break down this entire complicated topic in 6 simple points. If you watch this video till the very end, I know that majority of you would not watch it, would drop off. Please don't do that. If you do not have time, please come later, watch this video. This video has been very well researched, so you will study, learn a lot about macroeconomics, finance, technical analysis, fundamental analysis, business analysis, all combined. I will give you concrete contrarian viewpoints that will sharpen your perspective about becoming a better investor. A big shout out to our sponsors for today, which is Vested. It is an excellent platform for US stock investing. They have recently started offering alternate investment portfolio. So in case you're looking to build an all-weather portfolio, which is very well diversified, which comprises of US equities, solar investment, and a bunch of other alternate investments, so definitely go and check out Vested. Now with that said, let's move over to the main video. And also a very humble request that please like these type of videos. These type of videos are rarely discussed by anyone. I have no boots to lick or access to grind, so I can freely make these type of videos. So hopefully your support will mean a lot, and hopefully you will watch this video with a rational perspective. So point number 1, why I feel that Marcellus has done very poorly is the fact that they have an oversimplified investment thesis. Now, what is the meaning of that? So for that, you need to understand the entire philosophy of coffee can investing. Now, of course, it's a big book. Most of you might not have read it. Here is an important snippet that I will stick from there, and I will decode some important critical words from it. Now, while there are many highlighted words, there are 3 critical words that I would draw your attention to. First is something called as ROC, return on capital employed. Mr. Mukherjea is a big fan of companies that have a high ROC. In simple words, ROC means efficiency of capital. Now you'll say, "Are simple words come away? This is like complicated word." See, it's very simple. Basically, whenever a company is there, for example, if I start a company and let's say that I get 1 lakh rupee of capital, how would I get this 1 lakh rupee of capital? Maybe I will do some equity finance, or I will do some debt financing or loan. So this is called as equity and this is called as debt. Debt means loan lena, and equity jo aap dekhte ho, that you go and buy stocks on Zerodha, that is a way of financing the equity. So this E plus D is the capital, so to say, and the entire efficiency on it is called as return on capital employed. Just to break down this example further, so let's say that if I start a company, I get 1 lakh rupee in the form of equity plus debt financing, and by using this money, I'm able to make, let's say, 1.2 lakh by next year. So what does that indicate? It indicates that I'm using my capital efficiently because my money has grown. I have grown this capital by 20%. So my ROCE would be 20%, right? So Mr. Mukherjea looks for high ROCE company, nothing wrong there. This is a quantifiable matrix and it's easy to compute, so to say. He also buys companies that have very low debt, and this is one of the reasons why he has rejected companies in the infrastructure space, cement space, वगैरह वगैरह. Third and finally, he looks for something called as clean management or good governance in the company. Now, some of these factors are qualitative. For example, ROCE, compute आप कर सकते हो. Low debt, you can compute. But clean management is something that you can't really go after. There is a lot of manipulation that happens here. So theoretically, I would argue कि theoretical concept बहुत अच्छा है, but in order to practically apply, it's really, really tough. This is the first key limitation. Now, the second key limitation is that Mr. Mukherjea is a growth investor. Now, growth investor means that they will go and buy companies at whatever prices. They are not really worried about the price that they have to pay for a good asset. As long as the asset is good, that means that the company is growing. It's completely okay. They are willing to pay a price premium on that. So that is the essence of what a growth investor means. This is very different from a value investor. Now, a value investor will never pay a high price for a company. They will do something called as computation of intrinsic value of a company. Intrinsic value means कि इस पेन की कीमत intrinsically कितनी होनी चाहिए, right? Maybe like 100 rupees, 250 rupees, something like this. So the intrinsic value becomes 250. That is the legitimate cost. क्योंकि आप कैसे compute करोगे उसको? For example, you might think कि अच्छा यार, it has plastic, it has some needle on it. So plastic would cost 5 rupees. This needle will cost 2 rupees to manufacture it. Maybe like add another 50 rupees. Then 50 rupees for marketing, 50 rupees for profit. So आप पहुंच गए उस हिसाब से on whatever intrinsic value you compute. So this is one way of arriving at the intrinsic value of a particular company or a particular stock. Now, value investors are very, 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 very particular about buying a right asset at the right price. But on the flip side, the growth investors, they simply say that, you know what, as long as you simply buy a good company which is growing and you keep on holding it, you buy and forget, give it 5 years, 10 years, 15 years, the company will grow, so will be your money. So Mr. Mukherjea, very, very important point, is a growth investor, and his portfolio has underperformed the market and is likely to underperform the market as long as we are not in an extremely bull run phase, जहाँ पे जो PE होता है stock का, that grows massively. Now, this is a point that you will understand further, but I hope that the story so far is clear to you. So to summarize the first point, one of the key reasons why Marcellus has underperformed the market is that yes, they bought good assets. One could argue that companies like Alkylamines or companies like HDFC, Bajaj, they're all good companies, but if you buy them at crazy valuations or very high valuations, and if there's valuation correction that happens in the market, your portfolio will come down. And that is precisely what has happened with Marcellus's portfolio. So the important lesson for us is that we should buy good assets at the right price. If the price is not good and if we are overpaying for certain assets, then it probably might not make sense even if the asset is good. Now, the second key reason why Mr. Mukherjea's portfolio has performed really badly is that he outright missed some of the sitting ducks where money could have been made very, very easily. A classic case in point is Punjab National Bank, and more precisely public sector banks. Now, for example, many other investors have been saying that, you know what, there is a massive rally that is happening in the public sector bank domain. This is going around 1.5 years back, and some of the banks, for example, Punjab National Bank has almost doubled, Canara, UCO Bank, Union Bank, almost any public sector bank that you pick, it has shown a massive rally. And in fact, even now, some of these public sector banks are outperforming the market. Now, this particular interview was done on November 30th, 2022, and Mr. Mukherjea was asked about his investment thesis in public sector unit banks. And he said that most lower tier banks, such as Punjab National Bank, are still plagued with high levels of toxic debt. Now, this, according to me, is completely incorrect. The market has not disregarded this entire information. In fact, the debt for Punjab National Bank has been coming down. There has been no problem there as a percentage of the overall revenues. It has been coming down. There is no problem there. Second is that the books for public sector banks had been cleaned by 2018. 2016, 2017 was the time of Mehul Chokshi and Vijay Mallya and all these willful defaulters. They were the ones who caused a massive panic, so to say, because they took the bank's money and ran away. In fact, PNB was involved very closely with one such business. But after 2018, bank cleanup had already happened. And just to show this on the chart, and I will just quickly show it to you. So this is the crisis phase, and the stock came down all the way from 130 all the way till 30 rupees, right? So this was the cleanup phase that the cleanup was going on. And after that, then it is not as if that the market started buying Punjab National Bank here somewhere. No, the market was aggregating Punjab National Bank in this entire zone. You can see the tallest buildings happened here. And after that, the stock has become a rocket and it has given close to 100% gains. Now people are sitting and wondering that, you know what, ab acha time hai Punjab National Bank khareedne ka. The short answer is, I don't know, right? Now why? Because there was a very clear investment thesis when the current price of the stock was way below its book value. Ab hamesha yaad rakhna, when it comes to public sector companies, if their book value is massively trading at a discount and there is some kind of turnaround that is happening in those stocks, probably it's a great opportunity to add. If you as a retail investor or as a fund manager do not add these type of opportunities when there is a very clear run up that is going to happen, then of course the portfolio is going to suffer, and that is precisely what happened with Mr. Mukherjee's portfolio as well. So just to summarize the second point, and the key takeaway is that whenever we are seeing fundamental change in our industry that had been problematic, probably it's not a bad time to buy it. So this is called as finding opportunities. We should definitely do it. Recently also this has happened. For example, I was yelling at the top of my voice that small cap, mid cap, brilliant opportunities 6, 8, 10 months back. Now it has given massive crazy gains. Similarly, there was a problem with the US stocks last year. Now that was a great time to be buying those type of opportunities. What are some of the opportunities that you can find in today's market? So I would say that this would be pharma. So if we can pick some really good pharma stocks, because pharma stocks have done really badly, then that industry according to me is going through a turnaround. I will make a specific video. Tomorrow I will write a detailed post on my member community section also regarding the same. In case you are a serious investor, definitely go check out Wisdom Hatch Investor Community. You will find the links in the description and comment box. Try it for a couple of months. I explain everything fundamentally there. So moving on to the next point, which is point number 3, that Mr. Mukherjee's portfolio has done badly because he has sold stocks at wrong time, and according to me, I could not understand the rationale of many of those things. So key example here would be the story of HDFC AMC, which Mr. Saurabh Mukherjea sold at negative 40%, right? After holding the stock, he generated a negative 40% and sold it. And this was done somewhere in June of 2022. So tab se ab tak ka record dekh lete hain, what has exactly happened. So this is June of 2022. Stock was at 1800. Now it is trading at 3000. So it has generated more than 60%, 70 odd percent run up. And most of this run up has come in the last 6 months itself. Now see, anyone can go wrong in terms of the stock pick. The idea is not personal criticism here, but the idea is to understand the rationale. And here is the rationale why HDFC AMC stock was exited from the portfolio. And here the rationale can be captured through this paragraph, that owing to the reduction in our expected long-term earnings growth forecast for HDFC AMC, our position sizing framework has suggested an exit from the stock. Now, what is the meaning of that? I don't understand. This looks like just a bunch of words which have been strung together, and it does not make much sense to me. Now, if you think like a very commonsensical investor, now what is the business of AMC? So I will explain this to you in 30 seconds and you tell me whether this makes sense or not. So AUM business is what HDFC AMC is into. So AUM means that you are running 10,000 rupee SIP on every month basis, right? Now, when the market goes down, what is it that a normal investor will do? Well, they will run away, right? Because market gir raha hai, panic ho gaya, ye wo. So people will stop their SIP. Now the markets have started to bounce back. You will see extreme greed in the market. So what is going to happen? Well, people are going to pour even more money when the market is going up. So how would an AUM business or HDFC AMC type of business make money? Well, they will make money very simply when the markets are going up, because how do they make money? They make money on percentage commission on the AUM. When you're doing this 10,000 rupee wali SIP, they will charge like whatever commission, half a percentage commission, 1% commission, whatever the commissions are, and they will make money. So as the AUM size grows, the company becomes more and more profitable, and this is likely to happen when the market starts to do a run up. Now, back in 2022, when this entire stock was sold by Marcellus's portfolio, the market was falling. It was not in a good zone. The entire market was in a bad zone. So of course, an AUM business is going to suffer in such a scenario. In the last 6-8 months, there has been massive market recovery that has happened, and AUM stocks, not just HDFC AMC, but a bunch of AMC stocks have started to do well. So now people are asking that should you be buying HDFC AMC or AMC stocks? Well, I do not know. I don't know the exact answer to this, because a lot of run up has already happened. One major leg of run up has already happened. From this point, you need to study the fundamentals, and if the next investment thesis You have to be very clear where the growth is going to come from. Will it happen due to the market up move? If you feel that the market is going to move up from this point, it will reach 25,000, 30,000, vagera, then of course AMC business will continue to do well. And that is the reason why something like Angel One has done really well. It's again is tied with broking. Something like CAMS, CDSL is doing really well. AMC businesses have done really well. I don't know if it is the right time to build new fresh positions. It really depends on your market perspective, what your holding power is. But back in 2022, selling in this industry did not make a lot of sense. So the next reason for poor performance has been the wrong macro analysis in a way. I do not mince my words. I will just categorically call it out because I was able to uncover some information. This information came in ET dated 23rd Feb 2022. In an interview, you can go and check it. And this was the piece of discussion. So let me first quickly take you through this macro point that was spoken about, and then I will help you understand. So the question asked was that you had mentioned that you're not losing sleep over tracking what is going on in the movement in the bond yields. And this year you would have heard a lot about bond yields, कि उसको लेके काफी परेशानी चल रही है and all that. And spiking in global tensions and headlines are getting over. Are you worried about the overall macroeconomic backdrop back home? So this was the answer, and this is what Mr. Mukherjea said, that if you look at the last 70-year data, American market, Indian market, almost always rising bond yields, rising interest rates are accompanied by expanding economic growth, which is what we have in America and India. I don't know if this is correct or not, because honestly this is very vague. And just to help you understand this concept better, let me just take you to an important chart and you will be able to parse through this information. Okay, so here is the US interest rate history, and basically what Mr. Mukherjea was saying is कि यार जब भी interest rate ज़्यादा हो जाता है, there is like some kind of rally that happens. No, so that did not happen in 2022, and again that is the reason why the fund did not perform well. Actually what ends up happening is, and the correct macro explanation there would be, and let me highlight that with a different color, that whenever the interest rate falls and they settle to a new normal, for example after 2008 when the interest rate fell all the way from 5% to close to 0% and it settled there, this became one of the biggest bull run periods, right? So this is something that always happens. This has happened in 2020 also, that there was a sharp correction in the market, then the interest rates were cut and it settled, and this is where the rally happened. So the explanation that was offered, it was partially correct. Now, how can you use this information to make money in the stock market? It's very simple, that right now we are somewhere here and almost every economist is predicting that we are going to stagnate here. After this, the interest rate is going to get cut and it is going to get settled. Maybe it will settle at 0% or maybe it will settle at 3%, we don't know. But whenever that new normal is built, that will be the major leg of the bull run. तब तक आपने बने रहना है till that point. If you buy and hold good stocks which are available at a discount, you will make good money. For example, if you want to make good money, now this is not a stock recommendation, but see, something you buy of value. For example, right now, private sector banks are doing really well. Finance stocks are good, fundamentally sound, low PE पे मिल रहे हैं, valuations are fine, clean company. And even if you apply Mr. Mukherjee's framework and add the valuation bit to it, there are good companies available in the market. Buy them now when they are available at lower valuations. Hold them in this zone. You are going to make crazy money from it. Okay, so the next reason why Mr. Mukherjee's portfolio has not done well, that again, it is somewhat filled with a lot of generic advice, so to say. So one of the key generic advice that I will touch upon is one of the statements of his, that never sell clean, well-managed companies because of valuation. I don't know. This is like buy and hold forever theory. I do not truly believe in it, because होता क्या है कि बड़े time तक corrections रहते हैं and there are cyclicity in businesses. There is something called as boom and burst cycle that happens in a bunch of industries. Now let me give you an example of a very well run company called as Maruti and show you the stock performance. I hope that all of us will agree that Maruti is a clean company. There is no issue, generally speaking, in terms of the brand management or how the entire management has operated. Good company, अच्छा काम करती है, clean image है, वगैरह वगैरह, चोरी चकारी नहीं करती. So it will fall in that category. But what about the stock market performance? Well, unfortunately, it is a cyclical company. And here is where you can see the cycle, that if you would have purchased the Maruti stock in 2018, it's 2024 almost, and 5 साल हो गए, almost 6 years now, and zero returns have been made, or close to 0% returns have been made on a good clean company. So the entire point of view that just simply buy a clean company, buy and forget. Here is a video that I had done on ostrich investing, that you cannot just simply buy and forget. Buy and forget तो PMS वालों के लिए बहुत ही अच्छी चीज़ है, right? I mean, you just go give your money in SIP format to a bunch of people. They will make their percentage. So of course they are going to say keep buy and forget, buy and hold forever, keep on doing SIP only, and you will keep on doing SIP and never enjoy the money that you will make. It's absolutely critical to understand when to book profits, when to take off money from the market. It's also equally important to understand when to slow down in terms of investing. So the critical lesson as per today's market circumstances that I will talk about is the fact that, see guys, right now the market is almost at its all-time high. If you have already put in a lot of money in the market, slow down. There is no point in unnecessarily, hum to karenge. No, please do not do that. Be a little bit sensible. Understand that you need to buy at consolidation points. Understand that you have to take money from the table. SIPing to mutual fund walon ne bana rakha hai, but please understand that you need to cultivate a basic sense of managing your own money. You cannot outsource your health. You cannot outsource your wealth. Big managers make mistakes. Yahan pe to I am talking about one of India's most celebrated fund managers. If you go to individual mutual funds and all that stuff, वहाँ पे भी बहुत सारी problems हैं. So please understand all these points. Please just do not believe in generic statement कि SIP करते रहो जिंदगी भर, right? Please learn some advanced concepts. I will link some videos in the description and comment box. Again, I would encourage you to join my member community. It's a wonderful community, very serious investor community, and you will be able to understand what is happening with your money. Now, just to cover this point fully, that at one point in time when I was reading one of the interviews of Mr. Mukherjea, he has not been a very big proponent of ITC, and he again missed that entire rally of ITC. Now, if you go back to the previous statement that was being said, कि यार clean, well-run companiयाँ होती हैं, which ROC is high and all that stuff, इतनी ज़्यादा debt-wet नहीं होती, then you should buy it. So again, let's just quickly check the numbers for ITC, that where does it stand in this entire domain and how does it fit. So ROC is very high, right? A good ROC is above 20 is considered to be exceptionally good. Its ROC is high. Its debt, it's a zero debt company, nothing wrong. Monopoly, excellently managed. One of the most well-managed companies in India is ITC. So why was this not added to the portfolio? Again, I have no answer there. So again, the philosophy is a little bit theoretical. It does not hit the practical points. Now, the last point that I would like to discuss is that the way the portfolio has been constructed, the way I see it, it's a poor alpha portfolio. It will have a hard time beating the benchmark. In fact, he was asked this question point blank, and this is the question that in the last few years, Marcellus fund struggled to beat benchmarks. Does it bother you? So again, a lot of points have been stated here, but the discussions are more around what we are trying to achieve over the next 5 to 10 years. Dekho yaar, return nahi banta, then you put everything on 5 to 10 years, right? And that way you can put like everything in next 100 years, right? All of us will be dead. So what's the point of that? The important point that you need to understand is that you need to respect the market's verdict. There are a lot of things that have been wrong, right? For example, Adani stocks are giving a run up. I'm still not investing my money. I'm not convinced about it, but I tell very categorically, यार देखो मेरा पर्सपेक्टिव है, मुझे इतनी रिस्क नहीं लेनी, आपने लगती है, प्लीज your money, please put, if you can bear that volatility. I don't want to do it. But yes, if the market is saying, you know what, Adani stocks are going up, and you have to respect the verdict that, okay, chalo theek hai yaar, that for whatever reasons people are buying. It's very important to be both considerate from a short term, mid term, long term basis. And if a fund manager is not making money for you, if a mutual fund is not making money for you, be extremely harsh. If you cannot perform, then you should not be giving your money. It's your hard-earned money. 2% PMS wale charge karte hain, 2% on your AUM. That is like giving good 10-15% from your profits. So it's heavy fees that you are paying. Expect meritocracy, reward meritocracy. So anyways, coming to the core topic. So just to show you CCP companies, which is one of the portfolios of Marcellus fund. Here you will see a bunch of companies. Now see guys, these companies are very good. There is nothing wrong with these companies, but paying someone 1.5-2% of PMS fees to buy these type of companies, what sense does it make, right? You should be paying fund managers money when they are doing some work from that perspective कि यार वो अच्छे चुन के कंपनियां लेके आ रहे हैं, they are buying it at the right time, exiting the positions at the right time. Then अगर आपको HDFC बैंक की खरीदना है या Asian Paints खरीदना है, that is a clean company, उसमें आप क्या कहानी सुनोगे, right? I mean, what story are you going to listen to that? It's very easy, just go and buy it yourself. If you just see a simple consolidation point, I have made at least 20 videos. Just look at where you need to buy all those companies. थोड़ा सा technical analysis आना चाहिए. You will be able to easily add that and save a lot of money in commissions. So to cut the long story short and coming back to the topic, see guys, these companies are good compounders, so to say. They might compound at 10-15%, somewhere in that range, as good as index, but majority of these companies are not going to double or triple in size. And if you are not picking any of those companies in that zone, very unlikely that you are going to beat even the index. I do not see these type of companies beating index per se, unless of course you are buying them at a discount. For example, right now something like Kotak Bank, HDFC Bank is at a discount. आप अभी खरीदोगे मे बी इट विल गिव यू मच हायर अल्फा कंपेयर टू निफ्टी. अल्फा का मतलब होता है दैट कंपेयर टू द बेंचमार्क हाउ मच एडिशनल रिटर्न्स इज इट जनरेटिंग. फॉर एग्जाम्पल निफ्टी 50 if it is growing at 12% and your portfolio, if because you have purchased HDFC Kotak now, it might grow at 15%. So your alpha is 3%. But अब हर मार्केट में HDFC बैंक खरीदते रहो, एशियन पेंट्स खरीदते रहो, then you will not generate any alpha. Now on top of that, the sad story is that if you look at even the small caps, Marcellus's portfolio has been the worst performing in the Little Champs group. You would have been much better off buying the index. So this brings me to a very interesting clip that was done by Mr. Warren Buffett, and I will just play it for you and then we will close out the video. So it talks about the investment manager's viewpoint. So just have a quick listen.
It's an interesting question. I mean, if you hire an obstetrician, assuming you need one, they're going to do a better job of delivering the baby than, if the spouse comes in to do it, or if they just pick somebody up off the street. And if you go to a dentist, if you hire a plumber, in all the professions, there is value added by the professionals as a group compared to doing it yourself or just randomly picking laymen. In the investment world, it isn't true. I mean, the active group, the people that are professionals in aggregate, cannot do better than the aggregate of the people who just sit tight.
So I hope you enjoyed the video. There are 3 critical lessons that I will draw your attention to. Number 1, please learn to manage your own money. All good investors know how to manage their own money or at least have a sense. Just आप outsource कर दोगे, there will be nothing good that will come out of it. Number 2, please do not pay money for someone to buy HDFC Bank, Asian Paints, these type of companies. You're wasting your commission money. It's as simple as that. Look at the performance, reward merit. Your job as an investor is to reward merit. आप खुद सोच के देखो, when you go for a job, if your performance is bad for a year, how much will your boss take it from you? They will throw you out in a few months itself. So when you're giving someone your money, have a basic sense in terms of that. Now, third and finally, start learning more about portfolio building. As a next step, I will recommend you that you go and watch this video. It will give you a better idea. Thank you so much for watching and I'll see you soon.